Matt Orton is now with us, U.S. market strategist, chief market strategist at Raymond James Investment. Matt, good morning. Great to have you with us here as always. Prashant this side. The moment of truth is 24 hours away. And I think, nobody's any wiser in that sense. It's like a dead heat. What is your own sense, Matt? Because is it going to be what's the most consequential outcome going to be for emerging markets in your opinion?
Good morning, Prashant. Always good to see you, and certainly a busy week. I think what I've been encouraging our clients to think about is look towards almost bipartisan ways to play this election, because you can make a case for or against emerging markets in the short term, really regardless of who wins this election. If Trump ends up being the winner of the election, I think very short term there could be some pressure on emerging markets just because U.S. rates are likely to go higher, currencies likely to appreciate, thus putting some pressure, China pressure as well due to tariffs. But when you think about it longer term, it would actually, I think, benefit a number of U.S.-friendly Asian nations like India, Taiwan, Vietnam, who are alternatives to China. Similarly, under a Harris victory, the friendshoring theme, I think, takes front and center stage, where India, again, is a significant beneficiary under that sort of administration. So either way you cut it, I think there's certain pockets of the emerging market complex that will continue to look attractive. And so, again, I've been telling clients, you don't need to be chasing this market. The pullback we've had in India, I think, is a great chance to reset, reload some positioning. And regardless of how this election shapes out, I think there's a number of EMs, India included, that look very attractive regardless of the victor.
Okay, that's good to hear. Matt, considering we've just been in a sea of selling over the last couple of weeks, yesterday included. So tell us, since you're saying it's a good time to reset and reload on India, what parts of the market do you like here?
I think the whole Indian market has really been taken to the woodshed. I mean, for India, I guess, is a relative term. It's been such a beacon of strength over the past 2 years. Seeing a little bit of downside to the tune of 7-8% really isn't that bad in the longer term picture. It's helping reset some froth, reset some valuations. And I actually think Indian equities are starting to look fairly oversold right now. So when you look across the market, I'm focusing on higher quality companies at this point, those whose earnings results have been strong or at least signaling strength going forward, those who are leaning into what I believe is going to be strong continued GDP growth for the country of India. So I think financials hit that mark. ICICI Bank has been one of my favorites. I think it continues to look very attractive, and it's actually held up reasonably well as the rest of the financial complex. Similarly, the IT services space, which is one that I've tended to tactically play over the past year or so, you've had decent results. And when you look at companies even like Infosys, I think there's good resiliency that's starting to be shown. And so when you have meaningful sell-offs, that presents a good opportunity to reload, even on the consumer side, like Hindustan Unilever. There's been a significant sell-off there, and that name's starting to look a lot more attractive to me from a valuation standpoint. So it's all about quality and finding quality names that have sold off that I want to own for the long term.
All right. Hi, Matt. Morning. Good to see you, Ben. What about the call in Mahindra and Mahindra? That's working pretty well. Yesterday we had the auto index that was nervous, but that one did well. Your view on the auto sector?
It has. I still like the auto sector, Nigel. I think M&M is still one of the premier assets in the overall auto space. So I kind of look at the sell-off as an opportunity just to reassess. My fundamental thesis still plays out with respect to the growth they're seeing in new car issues that they've had. Really good results that we've seen. The farm implement part of their business continues to take off. So I think there's a lot of fundamental strength there. So again, weakness in a high quality asset that continues to look attractive. And really the auto space over the past month or so has sold off pretty hard. So again, where you can find higher quality investments in that space, now is the time to be looking to add positioning, because you're doing so at very favorable levels. So as an active investor, I think the sell-off is actually really interesting and a great time for longer term investors to start to be active.
All right, Matt, thank you very much for that. Great speaking with you as always, and I hope to speak with you again soon. So I mean, an optimistic view coming in from Matt at Raymond James as far as India is concerned, saying that, well, the market here looks oversold after what we've seen from the highs, almost about 8.5% for the Nifty.